All right, let's get right into it. Behind India's massive tech boom, there are these key companies, kind of like the engine room of a giant ship. Today, we're pulling back the curtain on one of them, E2E Networks, an AI cloud pioneer that's really quietly reshaping the country's digital landscape. So, think about it. As India is just rocketing into the age of AI, what's that one secret ingredient that's making it all happen? I mean, it's not just about brilliant software or super talented coders. No, it's something way more fundamental than that. So, first up, India's AI gold rush. Because, before we can really get to know the company, we have to understand the absolutely massive wave that they're riding. Just take a look at this number, $13 billion. That is the projection for India's cloud market by 2026, and it is growing at a blistering pace. This isn't just some slow and steady expansion. It's a tidal wave of digital change, and that creates this huge, huge demand for the core infrastructure that makes it all work.
So what's feeding this fire? Well, as you can see, it's basically a perfect storm. You've got the AI boom creating insane demand, the government is pushing hard for everything to go digital, and, this is a big one, data localization laws are creating a protected home turf for Indian companies. I mean, the market is practically tailor-made for a local champion to step up. So, in the middle of this massive gold rush, who's selling the picks and shovels? Let's move on and meet the star of our story, E2E Networks, the local hero that's aiming to power this whole revolution. So what exactly makes E2E so different? Well, they're what's known as an AI-first hyperscaler. Now, forget about those general do-everything cloud services. Think of these guys as specialists. They build the high-octane GPU-powered engines that are just absolutely non-negotiable for serious, heavy-duty AI and machine learning.
Okay, a niche strategy sounds great on paper, but you know what they say? Show me the money. Do the numbers actually back it up? Let's dig into the data and find out.
And wow, the trajectory is just stunning. The company has pretty much quadrupled its revenue in only 4 years, going from 145 crores to a projected 585. This is not steady growth, folks. This is a rocket ship. It's an explosive exponential curve. And let's put a hard number on that rocket ship. We are looking at a 42% compound annual growth rate. I mean, that is just a staggering pace. It proves they are scaling up incredibly fast to meet all that market demand we were talking about.
Now, this is the part that really gets me. How did they fund this incredible growth? You'd think they'd be drowning in debt, right? Well, this number, their debt-to-equity ratio, is just 0.02. That's practically zero. It means they've pulled off this explosive expansion while staying almost completely debt-free. That right there is a masterclass in financial discipline. And listen, it's not just about getting bigger. It's about being incredibly profitable while you're doing it. With an operating margin over 35% and a return on equity of 28.5%, their business model isn't just growing. It's a highly efficient, profit-generating machine. I mean, all of this sounds incredible, but it brings up one huge question. The cloud computing world is dominated by absolute Goliaths. We're talking Amazon, Microsoft, Google. So how in the world can a smaller Indian David possibly compete? Well, their strategy is actually simple, but it's brilliant. See, while the giants try to be everything to everyone, E2E specializes. They're laser-focused on AI. They combine that focus with a massive 40 to 60% cost advantage, and they're automatically compliant with all the local data laws. They aren't trying to play the giants' game. They're playing their own. It's a classic asymmetric strategy. And these advantages create what investors love to call competitive moats, defenses that protect their business. And it's not just one thing. Their low cost gets customers in the door. Their specialized tech makes it really hard for those customers to leave. And as more and more AI developers jump on their platform, the whole ecosystem just gets stronger for everybody. It's a really powerful self-reinforcing cycle.
Okay, so we've looked at the market, we've looked at the financials, we've looked at the strategy. So what's the final verdict? Let's get to the bottom line. So the analysis ran what's called a discounted cash flow model, basically creating 3 possible futures. Even in a tough bear case scenario, the valuation comes out to 1,400 rupees. In the super optimistic bull case, it's 2,100. And the most likely base case lands right in the middle at 1,750 rupees per share. So given that powerful growth story and all that potential, the final recommendation from the analysts is, well, pretty unambiguous.
it's a strong buy. And here is the final number. By weighting the probabilities of each of those scenarios, the analysis lands on a final target price of 1,850 rupees. Now, compared to the price when the report came out, that suggested some pretty solid upside. And really, this quote from the report just sums it all up perfectly. The core investment thesis is simple. The analysts see E2E as this direct and super compelling way to invest in two of India's biggest megatrends all at once: cloud computing and artificial intelligence. But hey, no investment is ever risk-free. To justify its premium price tag, the company has to keep growing at this insane pace, all while fighting off the global giants in a market where technology can change, in the blink of an eye. The pressure is on, for sure. And that right there brings us to the final critical question. E2E Networks has carved out this incredible niche for itself with a smart strategy and frankly flawless execution. But as the market gets bigger and the stakes get higher, the core tension is still there. Can this Indian champion continue to outmaneuver the global giants in the race to power the future of AI?